I'm not really sure what that agreement that came out of the G20 means. I'm not sure why China would agree to something over the next 90 days that it wouldn't over the past 5 months. I think what you want to look at is if there's an established quantitative target on purchases of U.S. agriculture and a timetable that's involved in that, some very selective steps taken on the Chinese to limit the acquisition or outright theft of U.S. intellectual property, and suggestions that there is going to be an ongoing set of negotiations that will address structural changes that would need to occur in the Chinese economy so that the U.S. would feel confident in pulling back on its tariffs. I think confidence building measures, not only around agriculture, but around liquefied natural gas and other purchases of other goods that the Chinese were already going to take, would be a good first couple of steps to create confidence in the market that these negotiations are real and just not another PR stunt. In the age of trade spats and proliferating global risks, we have 7 key considerations that all middle market firms should take into account. First is licenses and regulations, thinking about how your trademarks and intellectual property have to be protected, and then thinking about existing contracts, especially during times of profound supply chain disruptions. You know, only 14% of middle market firms have actually hedged effectively against supply chain disruptions in commodities. That tells us this is the first key consideration that all middle market firms should take. The second key point is thinking about the supply chains and how you may have to remap supply chains in order to find sources and inputs to continue meeting production targets in your own contracts should prices move to a point that are not acceptable. It's incredibly important that we also think about what are called non-tariff barriers. If there's increasing regulations around custom declarations, problems with infrastructure, and of course inventory levels. The third consideration is of course banking and foreign exchange management. I think you have to begin thinking about your international debt exposure, cash management, FX exposure, and international accounts and lending. All are critical during a time where volatile capital flows and risks coming from policy space all can impact middle markets and middle market firms in ways they haven't quite thought about in some years. The fourth major consideration is how supply chain disruptions and patterns of international trade can impact your budget. We think you need to begin thinking about price shocks, labor costs, and supply chains. You need to begin to evaluate import and export costs and how they may explode if there is potential disruptions to supply chains. Therefore, you're thinking about lead time delays and overall insurance adequacy. The fifth point of consideration, productivity and efficiency. First and foremost, you need to begin thinking about diversifying away from risk, doing a top-down review to identify where efficiencies can be increased via diversification or diversifying away from risk, and then finally, always and everywhere, how can I increase efficiency via automation? The sixth major point of consideration, you need to begin looking at the bigger macro picture, whether it's geoeconomics, geopolitical risk analysis, thinking about global risks in terms of your exposure, whether it's direct or indirect, and of course the business structure emanating from changes in tax or trade policy. The seventh major point of consideration, talent. You always need to begin thinking about your staffing requirements, especially as the war for talent intensifies under historically tight labor conditions. Finally, what you need to really do every year, especially in years like 2019 and 2020, is stress test your business, stress test your balance sheet. If they take into account the 7 points of consideration that we put forward, I'm absolutely certain they will continue to thrive, profit, and succeed in their own industrial ecosystems.